Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Tim, the U.S. Fed says, please don't call it quantitative easing. But what else can you call it when you're buying up $60 billion worth of Treasury bills every month? Doesn't it smell and look and whatever feel like quantitative easing?
It certainly does, and I'm sure that's not because there's a problem, with the market or anything. It's not a change in monetary policy or an indication of anything going wrong. It's just, they're just doing it to be nice guys, I guess.
So, by doing that, what are they trying to do, and will they be successful in what they're trying to do?
Well, I think the first part of that is they know full well the mess, and it's I know it's gotten kind of old talking about it. Everybody's talking about it at this point, but it's been going on for so long. But we talked about the bubble, but that it is what it is. I can't change the fact that it is the bubble, but it's all about the bubble. And if you digress just for a minute here, we go back from coming out of the bottom in 2009, in the first or the worst financial crisis since the Great Depression. What do? More of the same times some factor of, whatever, so, and that blew us up into this great bubble. And now, it's, in the last, since January of 18, we've been oscillating above and below that level. I think now for, 5 times we pushed back above that level. The market's just kind of hanging there. I've watched it since 2014, but in the last couple of years, really since 18, it has become obvious to pretty much anybody and everybody that you see every time the market even tries to correct into what in my world is a little short term, I call it a little trading cycle, lows, a little cycle of about 30 days, they just panic and they come out with a tweet. Oh, we got another China deal. We're going to talk, and I think, it's comical and it's manipulated by any and all means necessary to hold it with fake news, with obviously now coming out with basically, like you said, quantitative easing, and they know it's a disaster. We've been talking about it for years, and nothing has changed. It hasn't gone away, but as long as the industrials and the S&P continue to levitate, hey, the sheep are calm. But if you look at, the leading indexes and averages, I've talked about that last year going into that 2018 top, and, now we're seeing it again here. You're seeing the leaders, the structural leaders are they're leading. I mean, they're, when I say leading, they're structurally weaker than the industrials and the S&P, so that's a warning. Back in January of 18, we saw the most, just looking at it simplistically, I've got stock data going back to 1800. It was the most overbought, just looking at a monthly RSI, most overbought reading back to 1800. I've got some other extreme indicator readings that I'm looking at that are showing me things that we've never seen before here with this last advance. I've covered, that in the last research letter. There's other indicators I'm looking at that are typically associated, not 100% of the time that they occur, but they have, how do I say this so it makes sense? when I see the setup with these oscillators, it doesn't always equate to a waterfall type event, but the waterfall type events have had this indicator set up, if that makes sense. So we're seeing all these things. We still have the Dow theory primary bearish trend change that occurred from back in 2000 or going into the December low in 2018. That hasn't been negated. So all these things are still there. They're all still tremendous risk factors. Nothing has changed, but they just continue to hold this thing. And yes, you're right. Basically what we're seeing is QE. And the reason we're seeing it is because they know what we're dealing with. And obviously they're trying to hold it together as long as possible. Can they hold it together forever? Well, the answer is absolutely not. No bubble, in history has ever survived, and this one won't either. And all these efforts just make matters worse. And when you look at the amount of money that's being thrown at this, you look at the problem in the repo market and so forth, someone did the math. I didn't do the math. I've lost track of the math. I don't even know where we're at. It started out at like 75 billion, I think, and they were going to do it through October 10th, and then it got extended. And I was watching an interview that someone else did on a channel that I follow, and they said that equated to like nearly $2 trillion at that time, and that was, they said it was nearly equivalent to the federal budget. But then I looked up the federal budget for last year, and that was a little bit of an overstatement. The federal budget was like 3.6 trillion, I think. So it was a little over half, or right at half of the federal budget, the amount of repo money that they were infusing in the market for the liquidity. And so all these things, yes, something is drastically wrong, and at some point it's going to crack. And when it does, the structure will tell us, yep, it's broke. And like I said, we've seen the oscillations now 5 times above the 2018 high, and here we sit with all these problems. Yeah, it's going to crack. And like I said, we're looking for, the technicals will confirm, I think. We've seen cracks that haven't materialized, but once it really cracks, the technicals will confirm it, and we'll know.
Well, the Financial Post has an interesting headline today. It says, the most anticipated recession in history is coming, and it's tying investors in knots. That's true, because and let's talk about that for a minute. I know people that I respect, and their point is well taken. They say, there's too much company. Everybody sees this, and that's not the environment. The sentiment is not right for a top when everybody sees it. And as one guy was telling me, he said, of the people he followed, he said, you were among the only one, or the only one that at the time that he was tracking that saw and called the top back in 2007 for what it was. And he's like, nobody was hardly looking for that. I mean, I know there was a few people, but it wasn't this kind of company. Now, if you turn on YouTube, everybody's talking about the financial collapse. And yeah, I don't like that sentiment. The sentiment is not right when you see that sort of thing. But you can't deny the facts that we are in the environment that we're in. I mean, we're seeing them doing what they're doing, and they're not doing it because all is well. We didn't see these extreme oscillator readings and these extended cycles and all these. I mean, everything's at an extreme. We're not seeing those things because everything is normal. There is a problem. And I think it's become so blatant that, yeah, more people see it. But like I said, every time, what they have done is every time the market will even have an inkling of some sort of a technical setup where it starts to crack, they'll attack it. Literally, I've seen this. It's not conspiracy. I mean, it's just blatantly obvious for anybody with a brain. They'll attack it with news. Oh, we got a, like I said, we got a China deal or whatever. And it's just, I think, like I said, they've blown it into such a large bubble that it's just obvious to all. We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Tim Wood. Tim, junior gold miners have not enjoyed the big spike that gold itself has. Will gold miners ever catch up, or will they be dragged down even further if the markets collapse?
I think that the gold stocks are telling us that something's not right with gold. We've talked about that. How, if you look at just the HUI and the XAU, and you talk about the leaders in the equity markets, it's the same sort of thing. We have this non-confirmation, if you will, where this last advance in gold was not confirmed structurally by, I know it's kind of complicated. I mean, I know that the XAU and the HUI and gold stocks went up, but the structural cyclical confirmation at a higher level did not occur within that 9-year cycle. And, there's no time in history that I can point back since gold's been freely traded where you were this far into a 9-year cycle and these gold stocks didn't confirm. So that's a problem, I think. And that's the same problem that you're alluding to with the gold miners. It's the same problem I see we've talked about with raw materials and the CRB not confirming. So, no, I'm sticking to that. I think it was, I guess, a false break, if you will, in gold. But that said, the real test is going to be this next intermediate term advance, and I think it's probably going to be a failure. And if it is, then we should see gold turn down. What I think is maybe setting up for the liquidation phase. We're seeing, when I say liquidation phase, the leaders, the structural leaders I'm talking about with equities, they're leading. So, what I'm seeing there, my interpretation of that is we're starting to see some liquidation there. If you look at even Bitcoin was a leader in 2018 at that top. And, of course, it was a leader coming out of the bottom in back in 2018 at the December low. And now it's leading, it's rolling over, and, so we're seeing liquidation there as well. I think that'll bleed over into the gold market just like it did in 2008. But like I said, if gold is going to prove different, then it'll be with that next intermediate term advance that is still ahead of us. But my expectation is that that's not probably going to be the case.
So if the stock market falls, gold will go with it?
I think everything's going to go with it because, the liquidity. I mean, I think that's going to be the issue. I think it all goes.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Wood. Tim, are people overly optimistic when it comes to the price of crude?
Maybe. But again, crude oil has been levitating here, coming out of the August low. We've seen, there was a couple of articles that I have to agree with. Right as crude oil was on the brink of is at a technical juncture where it was on the brink of a real break, and we saw the drone attack, and crude oil spiked. And then right as it was on the brink of another breakdown, we saw, what was the last thing? It was
a missile attack
Iranian,
on a tanker.
On the tanker. Right. And there was articles that came out. I mean, we live in such and I hate to overuse the word, but it's true. I think it's just coming out. I think people are just starting to realize how fake the news is. And I don't believe anything but the time and temperature that I see on TV. But when the first incident happened, there were some articles out talking about how was it even real. Well, I don't think it was. I mean, now it's, last I heard it's back online and everything's good. So I tend to think that these may just be stories to try to help reinflate. And, like I said, fake news stories. I don't believe anything I see. And that said, they are failing. Crude oil is still holding above that August low. I think it's synonymous with the little short-term cycle low that we saw in equities back on August the 3rd as well. And I think that, like I said, with gold and commodities in general, I think crude oil and equities and all of it will eventually crack and go down together, and that's what they're fighting with attacking the markets with news at these critical points.
Everyone keeps holding out hope of a big U.S.-China trade deal. Do you think one's going to happen, or will it just continue to be a mass of smoke and mirrors?
I don't know. I think it's all smoke and mirrors, because here's the bottom line. People probably have lost track of time on this, but this China trade deal has been used as a tool to manipulate the market since last October, November. The first time I remember it, and it could have been going on before that, but the first time I remember it was last October, possibly November. I know that it was happening in November. I just can't remember if for sure if I remember seeing that happening in October. But in November, it was definitely occurring at critical points. I was trying to halt that decline with that. We saw it with remember the Mexican tariff thing? We saw it there as well. And all these efforts, let me say this, all these efforts aside, yes, it has, crude oil has kind of, it's holding above, the last cyclical low. Equities are holding up. They continue to levitate. And we have this, like I said, we are where we are there in treading water. But when you look beneath the surface, when you raise the hood and you look, we're not seeing a real reinflation. We're seeing a continuation of the ongoing setup with this ginormous topping process, this ginormous bubble. We're not seeing a reinflation of commodity prices. We're not seeing a reinflation with raw materials data. We're not seeing interest rates rising. We're seeing interest rates continuing to decline. That is an indication of a deflation, not an inflation. So they're not all, yes, they're successful in holding it. The efforts are not successful in mending it. So, they're going to continue to be able to do what they do and hold it until they can't. And then when they can't, I think we'll see it. Like I said, we'll see it. Technically, we'll see another Dow theory primary bearish trend change confirm the one that we already have. We'll see it in some of these leading economic indicators. We'll see it with some structural confirmation with the cycles, and then we'll have some indications that, hey, now it's broken. But right now, it just, the game goes on. Jim, let me add one thing. Okay. At some point, probably what it's going to take, and I'll just say this, it's just a fleeting thought, but at some point, I think what it's going to take to crack it is probably, news-wise, is probably something out in left field that the market is not anticipating. It's got to be truly a surprise or something, and then, you wake up one morning and boom, it's on. But anyway, that said, thank you. And if I could just add, this last October letter, there's some good analysis in there, about these indicators and the things I'm looking at and the things we're looking for. So, anyone interested in that, it's available at Cycles News and Views.
Tim, thank you again.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.